Oh, you just caught me trading. Oh. Hello guys, and welcome back to another week's episode. So as usual, I've had a look through all of the news over the weekend and the early stage of the week, and I am here to make sure that you're up to date on everything that's going on and how we can use it to our advantage when we're trading and investing this week coming. So first things first, we have had Crypto Hub have announced that the USA is the most crypto-ready country in the world. So we'll have to see how that all pans out and why they've come to this conclusion. They've also given Romania a surprisingly high accolade, but we'll get into that later. The Bitcoin supply is being eaten up by whales, and they are increasing their wallet sizes while the rest of us are just waiting for 25K, 20K in order to add some more. And we'll find out why that's not a very good idea very soon. We also have Bitcoin mining difficulties hitting all-time lows, which means it's now easier than ever to get into Bitcoin mining, and also much cheaper as well. So then we also have, moving on to OPEC, the UAE are not happy, and so there's a massive disagreement within the OPEC community. ECB have actually reduced their restrictions on dividend payout and also share buybacks from banks, following the US guys as usual. Got the S1 from Robinhood, and we also have some stats as to whether you should or shouldn't buy the IPO when it goes live for 100 million. And then also we have a US fund buying up a UK supermarket for around about £9 billion. And finally, we're going to finish off on some jetpacks and also Jeff Bezos. So you guys know the rules. Make sure you like, comment and subscribe. It really helps us boost the channel and make sure we're giving you great content every single week. So let's get into it. So a new report places the United States at the top of the crypto-ready countries. Now, this is not just down to how many ATMs they have. What Crypto Head has actually gone ahead and done is considered the numbers of ATMs, accessibility, legality of crypto, whether banks can use it themselves, and the number of online searches for crypto-related terms in calculating a crypto-ready index for 200 countries and territories. So if you whisper Bitcoin to your best friend, are you going to get arrested by the police? And if so, then you're probably going to rank quite low down on this index. So we see that United States is first with 713, Cyprus and Singapore both ranked third at a score just under 6.5. Now, let's have a little look as to what some of the numbers mean. So we have 17,436 crypto ATMs based in the US. Now, that's 16,000 more than the most second ranked country, which is Canada. Now, there's not really too much more to look into with regards to this article. One cool thing to see is that Cyprus ranked first with nearly 34,000 searches for every 100,000 people. Now, that they obviously ranked first in terms of the number of searches relative to each of the country's populations. Now, that's 34% of people searching for crypto, which is absolutely crazy. But we did see the largest increase year on year in crypto searches with 331% with countries like, and that was in Romania, with countries like Greece, Canada, the United Kingdom, Saudi Arabia not being far behind. Now, next, we have the Bitcoin supply held by whale entities hits a 2-month high in a very bullish sign, showing that large wealthy investors are getting back into the Bitcoin market and are actually accumulating, which may or may not have a direct correlation on the price. Let me know whether you think it does. I've got some interesting insights for you. So what we see is the number of coins held by a whale address. I'm going to call it an address. I don't care about an entity. Basically, a whale address is anything that has 1,000 Bitcoin right the way up to, up to 1 million Bitcoin, you know, Satoshi's apparent address, which we do or don't know whether it's true. If you guys do have some insight, please leave me a comment. I'm really interested to hear that. But we see that we have now rose 80,000 to 4.2 million Bitcoin. Now, one of the key things I want you to see here is, yes, we're seeing more whale addresses. Yes, the same whale addresses are accumulating more Bitcoin. Now, how does that affect me and you? Do we care? Is it going to affect the price? Should we buy? Should we sell? Let's have a quick look at this. So we see a very strong correlation between this yellow line, which is the amount of whale entities and the amount of whale addresses holding between 1 and 10,000 Bitcoin. And then we see the price correlating pretty close behind it. Where there's a big drop in the whales selling off, there's a big drop in the price. And we know Bitcoin is a supply and demand asset, and there's not too many fundamentals. Yes, yeah, I hope the Bitcoin fanboys don't arrest me. I hope you can forgive me. But we see an awful lot of correlation between drops in price and drops in the Bitcoin whales. So is the market being manipulated? I mean, I think almost definitely to some degree. I don't think we will fully understand right now. I think down the line we'll understand. I mean, people have been manipulating gold, and its market cap is what, 15 to 20 times higher than Bitcoin right now. So it is easy to manipulate to a certain degree if the right powerful people want it to be manipulated. But again, we just see huge drops in the wallet addresses holding a large amount of Bitcoin and huge drops in the prices. I mean, you see this here. With this increase, perhaps we will. Again, it's a supply and demand asset. So as the supply stays pretty much the same, the demand increases much faster than the supply. So then therefore the price increases. Say the institutions, they won't get into Bitcoin unless there is strong regulation, because like I've said before, they focus on capital protection. Now, if someone doesn't, let's say, if the bond matures and the US government doesn't pay, which to be honest is very, very rarely going to happen. It's only happened twice before. But if that's the case, then they know exactly who to go and blame. You know, they say, hey, I know it's you, you need to pay me. But if Bitcoin goes to zero, who are they blaming? Nobody knows, and that is a big issue. But anyway, we'll kind of move on from there. Next, I want to talk to you about the Bitcoin speed of transactions and also the difficulty level. Let me give you this example. So, if I am to count every page of every book on this shelf, and it goes quite far that way, it's going to be extremely difficult. But if I'm told that it should only take 10 minutes, maybe 8 minutes at the minimum and 12 minutes at the maximum, but it has to take around 10 minutes, it's going to be quite difficult for me to know what pace to go. And so if there was 100 other people in here, the chances of it being solved at the right time are much higher, okay? But my chance specifically are much lower because I'm competing with 100 other people, okay? Now let's consider all of the different people trying to count these books, these pages in the books. Let's consider them all Bitcoin miners. And now let's say somebody introduces some regulation, China then say, hey, you can't mine Bitcoin anymore. So a lot of the nodes go offline, i.e. people who I'm competing against, they leave. So then what the algorithm will do is the algorithm will say, oh, well, you know, there's less people, so you're less likely to solve it. So I'll make it a bit easier for you. You still only have 10 minutes, but you don't need to count all of these pages. You just need to count these ones and these ones. So I'm now saved like 60 or 70% of my work, and I still have to do it in the same time. So I have a much higher chance of doing it. So it makes it easier, it makes it cheaper. So what this means, Bitcoin mining difficulty records the largest drop in history as the price jumps. Now, miners who remain operational are likely to become even more profitable over the coming weeks. Guys, is this a chance for you to jump into Bitcoin? I absolutely think so. Get in there, get yourself a mining rig. I will. I mean, we've got pretty cheap energy out here in the UAE, so I think it's pretty good. I mean, we'll get onto that in a second. I mean, we've got pretty cheap energy out here in the UAE, so I think it's pretty good. I mean, we'll get onto that in a second. Let's have a quick look at this.
Mining Bitcoin, a virtual currency creating real-world risks.
Burn more fossil fuels in the middle of climate change to make fake money? It's ludicrous.
So, like I said, because there's been an awful lot of miners who have been essentially axed from mining Bitcoin, as we see here, we have a number of different providences within China clamping down on large Bitcoin networks. Okay, since the country has had historically hosted a large portion of the Bitcoin's network hash power. Now we see a lot of that has been shut down. Now, as a result, Bitcoin's mean block time slowed significantly, with some blocks taking as long as 23 minutes on Sunday, though the networks appears to have sped up a little bit since then. Now, that is, like I said, Me on my own, I cannot solve the problem of how many pages are in each of these books. If I have 100 people, somebody is more likely to be able to do it. Now, if everybody leaves, then what we need to do is we need to adjust the difficulty of the problem. So the Bitcoin algorithm is programmed itself to self-adjust the difficulty level every 2016 blocks, or roughly every 2 weeks. And roughly every 2 weeks, because we know that if we have 10 minutes per block, times by 2016 blocks, I haven't done the numbers, but I'm pretty sure that they're going to work out. Maybe you guys will let me know, but we want to maintain a target block time of just 10 minutes. So that's why the difficulty level is adjusted. Now, everything that you see here is built and maintained by oil, predominantly coming out of Abu Dhabi, which is the largest emirate in the UAE. Now, we have seen that the minister, despite oil being pumped up to $75 a barrel over the weekend, we have seen that the minister for the UAE wants to pump the taps on and doesn't want to back off ever. So he just says, hey, let's have an unconditional increase in production of oil, which the market requires.
Is whether the group will start to add more oil to the market, and if so, how much? Brian Sullivan is back with more. And Brian, I've heard you talking about this. You don't think there will be a huge amount of oil added, that this is going to be just a little bit, even in the face of these surging prices?
That's right, Becky. I mean, it's kind of funny to think that 500,000 barrels a day is now a little bit, but it really is, given not only surging prices, but surging demand. Of course, they go hand in hand. All right, let's talk about what to watch for today. We've got the OPEC meeting starting basically now, then the OPEC plus Russia and others starting a little bit later on today. Here are some of the key themes. As Becky noted, about a 500,000 barrel a day production increase starting in August is really what is eyed. Now, listen, in the past year, OPEC has done something it has never really been able to do, and that is under the leadership of Abdulaziz bin Salman, and that is come together to stop the cheaters, the quota cheaters, from simply pumping too much to meet their own needs. They have been able to wrangle them in, and we'll see if that can continue. We're looking at you, Iraq, and Nigeria.
UAE says its current level, set at around 3.2 million barrels per day in April 2020, is too low, so needs to be increased massively to 3.8 when the deal is extended into 2022. So the ECB is to lift the cap on Eurozone bank dividends and also share buybacks, so banks can increase the dividend that they pay to their investors in order to get more investors to buy their shares and pump the stock. So we all love pumping stocks, we all love to ride in on this. So what does this mean for you? Well, this actually follows an agreement where recently on the other side of the pond in the US, we saw Goldman, we saw JP Morgan, and we also saw Morgan Stanley and a couple of other banks increasing their dividend and also increasing their share buybacks. See, as you can see here, comes a week after the US Federal Reserve eased its restrictions on dividends and buybacks on American banks that it had imposed during the pandemic. Because obviously, if everybody's losing money and there's uncertainty, you don't want the banks just handing out tons of dividends to investors, helping the rich get richer, and then obviously perpetuating that feeling of, oh, you know, the bankers are just the worst people in the world, because even though we need them for our day-to-day lives, not everybody likes the banks, and that's a narrative that has to be controlled by people like the ECB and also the US Fed. Now, I want to talk to you about Robinhood. No, not that Robinhood. I want to talk to you about the Robinhood that's going to host an IPO and will be offering their shares open to the public at a value of 100 million US dollars. Now we can see here, I won't go through it all. This is called an S1. Now an S1 is really essentially just an outline as to how the IPO is going to run. It tells you who's going to be underwriting. So we see that we have Goldman Sachs and also JP Morgan as the primary underwriters. There's then Barclays, Citigroup, Wells Fargo, a number of other different banks who are also underwriting the deal to make sure that it works very well. And I won't get into exactly why an IPO and why someone has to underwrite it. If you guys do want to find out, let me know and I will do a video on that specifically. 17.7 million, which is an awful lot of users. The assets under custody, which is how much they look after, is $81 billion, but they have more than 50% of customers who are first-time investors. 50%! This is potentially a very, very big risk. Now, I'll get on to exactly what some of the risks are, but let's have a look at specifically what these guys said themselves. So they said, we have a limiting operating history, makes it difficult to evaluate our business and prospects and increase the risk associated with an investment in our Class A common stock. What that essentially means, guys, there's a couple, I guess a couple articles which really explain this quite well. The key thing that I believe this means is they have grown faster than they've ever grown before. They do not know how to maintain this level of trading confidence in their traders. They don't know how to make sure that as a company, they are retaining the traders. Because let's be honest, most people who are trading today on Robinhood got into it. As you saw, more than 50% have zero experience. Now, when the enthusiasm dies down, when interest rates go up, when everything becomes a little less exciting, will these guys still continue to trade with Robinhood? The answer is probably not. So this is something they have to be aware of. Secondly, they said we've grown rapidly in recent years and have limited operating experience at our current scale of operations. So again, if we're unable to manage our growth effectively, our financial performance may suffer and our brand and company culture may be harmed. So you heard it from them themselves. 4 different kind of takeaways from Fortune. They said, Robinhood is growing because of meme cryptos. So these are things like Dogecoin, for example. Now, Robinhood disclosed that 17% of its total revenue last quarter, or roughly 88 million, came from selling data on crypto trading, which is actually quite crazy, with more than a third of that just coming from people trading Dogecoin. So a third of this 17% just came from people trading Dogecoin. This is exactly what I mean. If Dogecoin does fall to zero or it massively wiped out, these guys are going to lose a huge portion of their revenue. And obviously, as people become to be a little bit more upset with the fact that Robinhood are in fact selling people's data, let's say their trading habits and everything like this, to other investors, these are the few things that really can hurt their brand.
David, we do have now some statements from Robinhood and Interactive Brokers about restricting trading on some names. The statement out of Robinhood says, our mission at Robinhood is to democratize finance for all. We're proud to have created a platform that has helped everyday people from all backgrounds shape their financial futures and invest for the long term. We continuously monitor the markets and make changes where necessary. In light of recent volatility, we are restricting transactions for certain securities to position closing only.
Now, as a publicly traded company, they have an awful lot of pressure to make sure that they are responsible to their investors. One of the ways in which they plan to do this, they will sell Robinhood stock on Robinhood itself. I mean, I don't know if there'll be any rules against where they label it, whether they, try and dress it up and gamify it a little bit more. I mean, if I was prone to a pump and dump, I'd probably just list my own stock at the very top of every page. Doesn't matter if people search for oil, Robinhood. Search for Dogecoin, Robinhood. Always pump the stock. This is not financial advice. Now, finally, I want to let you know Morrisons share price soars 28% on a takeover offer. Morrisons is a UK supermarket, one that I've actually known a lot of my friends when I was much younger used to work at. Not a very prestigious, 4th largest, but in fact, I mean, yeah, there's nothing wrong with it. It's a fantastic supermarket. Now, one of the key reasons why people are interested in this is Morrisons actually own 85% of their, how do I say this? Their premises. So a lot of the shipping, a lot of the stores themselves, they actually go and they buy it. Here we see, you have owns the freehold on around 85% of its properties, including the supermarkets, which if you are a nice big hedge fund, you can immediately sell once you have controlling power over it. And then you can have Morrisons rent them back. So you get that immediate cash injection. So let's say 85% represents, I don't know, $3 billion worth in property, just sell it all. Your income will be less after, but if you just make $3 billion in an immediate property sales, then, oh, look, Morrison's just made $3 billion. We own most of it. Let's take $2 billion. So it's a really nice way for these guys to get an immediate payout, but obviously the operating profits will be lower as they go down the line because they'll continuously be renting the places that they used to own the freehold on. But that's just a theory, conspiracy. I've got my tinfoil hat on, so I'm not entirely sure, but it does seem like something that a lot of these hedge funds would do. Now, because there's currently a lot of shall we say, competition and speculation, CD&R, they proposed to buy the firm with an initial offer that was rejected. So there's been a couple other people who have come in and said, hey, mostly US private equity firms who have come in and said, hey, look, we will actually buy it. As we can see, a number of other retail companies have also been pumping on the recent news. So 5% for Ocado, 3.7% for Sainsbury's, and Tesco climbed 1.1%. Now, I will say, even though Morrison has not really done too well in the past year, reported a 50.7% drop in annual pre-tax profit before exceptional items, was down to just 201 million, which obviously was around about 400 mil previously. So that's Morrison's. Now, it is one of the largest deals that would be done on a FTSE 100 company because the average, I think the price that Morrison's will look to sell for will be in the region of $6 billion. I believe that they've got it somewhere around about here. Yeah, so there was an offer at 5.5 billion, which then did get rejected. And now there's kind of a bidding war. So hopefully, I mean, CD&R will look to ideally kind of finish on an offer of around about 9 billion to take on the extra 3.2 of debt. But there we go for that one. Again, another little analysis of this. But the staff also, I will say, wanted unbreakable guarantees so that they didn't just immediately cut half of the staff to save loads of money and turn it into a money-making machine. Finally, let's finish on the use of jetpacks. So it's not really relevant, guys. There's not many stocks that you can buy with this, but it is absolutely cool. So I want to make sure that we put it in here anyway. So as we can see that jetpack technology has absolutely rocketed in the past few years, pardon the pun. And so in the next 5 years, deep-pocketed thrill seekers will be able to rent jetpacks in some countries where insurance companies won't spoil the fun. My eye is on Dubai. Whoop, whoop. So shout out to Dubai. We do know that obviously this is going to be vastly expensive when it does come to, let's say, retail guys like you and I trying to use this. So will be massively expensive, but one of the more, shall we say, sensible uses will be for rescue personnel, medical. So this is, imagine if there's maybe not a tsunami, but let's say an awful lot of rubble or an earthquake where you can't get to people. This can allow you to just quite easily fly over the top of any, broken down houses or buildings, whatever they might be, and immediately get to somebody. But I mean, maybe they'll have to work out the nozzle propulsion. You don't really want that going down and burning the guy who you're trying to pick up. But I'm sure they'll probably work out some vectoring or something like this. But anyway, finally, I will just put one other thing. Jeff Bezos, as we can see here, he is the visionary of Amazon.
Long term, I believe that it's very easy to predict that there are going to be lots of successful companies born of the internet. They're going to have very large market caps and so on. I also believe that today, where we sit, it's very hard to predict who those companies are going to be. So, you can make bets on these things, and I think that Amazon.com, if we're not one of those important, lasting companies born of the internet, we will have nobody to blame but ourselves.
He is stepping down 27 years after he has created Amazon. So he's stepping down. We now then have Andy Jassy, who was the web service, should we say, CEO. And AWS, just in case you guys didn't know, they control between 30 and 40% of the internet. So, you know, hosting of so many websites goes on through web service. So Andy Jassy has really put himself in a great position to be CEO of Amazon. Don't think that Bezos won't still be around though. He absolutely will. He's just stepping down as the active CEO, where he has been for 27 years to the day. And that is everything from us today, guys. I hope you have a great afternoon, and I look forward to seeing you again. Like I said, like, comment, subscribe. Make sure that if you have any recommendations, put them in the comments, and I look forward to replying. Take care, guys. Thank you very much.